All right. Three, two, and one. Here we go, Paul. Ramis Fakori here with the IRA Club. I think we got a star-studded, packed next 60 days, 2 months with all great new information. A lot of you have been yelling at me down my throat, saying, "Where has Ramis been? We need more webinars. We need to talk about more different or different types of investment opportunities that are out there." As I promised you, starting first quarter of 2024, it is a new year, and we are here to talk about all different types of new investment opportunities. Where are the trends or market trends and different asset classes that we are seeing across the board? I do want to give a few people just a little bit of time to jump on board, whether you're downloading via Zoom or jumping on from your phone, laptop, PC. For those of you joining us for the first time, because we do market these events on Facebook, Instagram, Google, LinkedIn. And if you are, again, joining us for the first time, welcome. We are here to discuss how to use a portion of your retirement funds within alternative assets. I know the majority of you that are listening are current IRA Club members. You guys already know this process, so I don't have to go into greater detail. But for those of you, again, that are joining us for the first time, many of you have retirement dollars, whether it's within an IRA, your current employer's 401k, right? Which unfortunately you can't touch, but that doesn't mean you want to not learn the process of self-directing. But also many of you have retirement dollars with an old employer. So, for example, an old 403b, 457, an old 401k, where you can have access to those retirement dollars to invest again in alternative assets. As I'm giving people an opportunity to jump on board, I'm going to go ahead and start sharing my screen. And Paul, just let me know when you could see. There we go. Can you see that, Paul, just to confirm?
Blank screen as of right now.
All right. Maybe it doesn't like me.
And IRA disclaimer, I can see it.
Well, I didn't want to go to the disclaimer right away, but we are here. We are here to discuss and talk about mastering the art of being a private money lender, whether it's your personal dollars or retirement dollars. This, Paul, as you well know, me and you have had discussions about this in the past. I'm telling you, I've seen as interest rates have increased, right? As many of you are having a much harder time discovering investment opportunities within the real estate space. Lending has become huge the last, I don't want to say it's been around forever, but within retirement dollars, I would say the last year. Again, as rates have increased, people are trying to figure out what to do with retirement funds. What is a different type of asset class that they could be looking into? Lending, whether it's notes, or better yet, within a specific type of asset class, again, has been a huge focus for IRA Club members. So for those of you joining, thank you. And Paul is a master at this. I've heard him speak at a couple different events. I've had him here about a year ago. Is definitely an expert in his field. Paul, correct me if I'm wrong before I introduce you. You probably have quite a couple thousand private money or promissory notes. Please forgive me. As you could see, I've been on the phone all day today, and my brain is kind of fried.
It happens to me all the time.
Oh, trust me. And I know, and I thank you, by the way, for those of you that are just joining us. Paul's literally at another event, stopped what he's doing, came to his office to do this webinar for you, to educate you on this strategy, and then he's literally driving back to the event. So, Paul, thank you for taking the time out of your busy schedule. Before I do introduce you, remember, to you IRA Club members, I'm doing this for you, right? Our IRA Club disclaimer basically states, when I educate you, you're doing an investment of your own free will. That is the purpose of self-directing. It's taking the control away from the Fidelities, Vanguards, and Schwabs of the world and giving it back to you, the investors, to look at different alternative assets. Not that we have anything against the stock market. As you all know, we now have a trading platform. So if you guys haven't joined last week's webinar, we're going to be doing one again in a couple of weeks regarding that. That's a separate topic of discussion. But the vision and the goal here is diversification. And that's why I do these webinars with our our resident experts. So we always still encourage you to reach out to your CPAs, your lawyers, if you are using a fiduciary registered investment advisor before you jump into any type of asset class. The agenda simply for today is, outside of introducing you to Paul, Blink Lending, who they are, what they specialize in, is discovering why credit scores are more than just numbers. And two, leading into category two, is learning the importance of validating or verifying your client's income, understanding that the process of qualifying available liquid assets is very important, especially within an IRA. Remember, those are precious dollars to you. Typically, most people forget it is a part of your nest egg. So we want to always be able to protect those. And then interest rates. Forgive me, I am not seeing that right. It's just blocking me off. Am I missing that, Paul? I see interest rates,
origination points, and allowable fees.
and the reasons why is because your head was blocking that. So I'm just moving you over. And then lastly, the new IRA Club process within your IRA. We're going to show you how you can connect with Blink Lending, Paul, his team, leading it into important dates. It is a new year, ladies and gentlemen. So there are some new rules and regulations because of the Secured Act 2.0 that went into effect. Make sure to go to the IRA Club website. I've illustrated the 25 most important bullet points about the Secured Act 2.0. If feel free to read it. It's over, I would say, 4,000 pages. 400 of those pages are geared towards retirement accounts. But again, I just took the top 25 that I thought was the most important for IRA Club members and just kind of simplified it, K through 8 it for our clients again. But for the first time ever, Paul, I don't even know if you knew this, but thanks to inflation, they actually increased 2023 and now into 2024. All retirement accounts across the board have received a bump. So great news. That's another way to tuck away more money. For those of you that don't know this, really important to know this. Many of your retirement accounts can now be done within a Roth basis. So if you have an employer's 401k, highly recommend that you open up a Roth 401k. If you're getting an employer's match, okay, take it within the Roth basis. People are forgetting to do that. So those of you that are listening that do have employer 401ks and do get a match, take the Roth dollars. They're very crucial for you. So take a look at that during your free time. Now, for those of you that are still calling us, and there are quite a few of you wanting to do a Roth conversion, the deadline was December 28th. So that means you cannot do a Roth conversion anymore for 2023. It would now have to be done for 2024. So just want to make that clear to everybody that is listening. Don't forget about the required minimum distributions for 2023. And make sure that you look out for those letters. Or if you have any questions, please feel free to reach out to the IRA Club or schedule a call. Paul, that's enough talking on my behalf. I want to jump in straight to you. Somebody threw something in the chat right away. Thank you for doing so, and thank you for the reminder. So just some housekeeping rules, Paul, before I introduce you. If you guys have any general questions, please feel free to put those inside the Q&A. If it is a personal question, please put that inside the private chat, which I'm more than happy to read out loud. Or if you don't want me to say anything out loud, please state that in the private chat, okay? I understand everyone's goals and situations are different from the next person, so we want to be respectful of that. But put inside the Q&A all of your questions. Paul, I'm done talking for right now. I'm not going to introduce you. I know who you are. And again, for those of you listening for the first time, have heard me say this in the past, it doesn't do it justice for me to introduce a host. So Paul, without further ado, and I'm not going to even try to say your last name because I might butcher it and I don't want to be disrespectful. Paul, welcome, welcome, welcome. Thank you again for taking time out of your busy schedule. Without further ado, high level view, who is Paul?
Father, I've got this on a slide. Father, husband, father of 3. My 21st year is this year, actually, in lending. I started in 2003. I've closed a whole bunch of loans since I wrote this up, which great reminder to get it updated. I've actually doubled my production. So I've closed over $500 million in loan originations, both traditional loans and non-traditional loans, which I'll talk about a little. The basis of this presentation, this webinar, it's through the lenses of a traditional mortgage lender, because In the private lending space, the way it typically goes is there's a group of money or a hedge fund or some insurance company. They're going to get together. They're going to start lending money. Rarely is there a background in lending with it. So I'm a fourth-generation real estate investor. I do own properties. I get to say I'm a fourth-generation real estate investor because, well, each of my parents and grandparents, they all owned one property. And so if you own one property, you become a real estate investor, and it's all marketing, right? So in marketing, it sounds much better to say I'm a fourth generation real estate investor. But the reality is I've bought more than they have. And I love to remind them about that.
Great. And like a little bit, I know you're going to go into a little bit greater detail about Blink lending and investments. I've had a couple of people actually reach out to me already and just maybe let them know a little bit. And I know this is probably going to be part of your presentation. Texas Notes. So I've had a couple of people reach out regarding talking to me about Texas Notes and what's the difference between Blink lending and investments in Texas Notes. Can you just elaborate a little bit on that?
Yeah, so when it comes to Blink Lending and Investments, we're a fully licensed, bonded, and insured mortgage company. We can do all the loans the big banks can do and the small banks can do, and plus many, many more. So if you're looking to buy a home to live in, we can offer you that loan. If you want to refinance, we can do that loan. If you want to cash out, we can do that loan. The difference from us and the other options is our interest rates are wholesale interest rates. So 9 times out of 10, we should be about 0.25% to 3/8 lower in interest rate than the rates you're going to get by walking into your bank. Now, we also do private money lending. Well, with all the traditional loans, there's things like compliance and licensing that you have to keep up with. And we found it much easier just to separate both entities. So Blink Lending and Investments does all our traditional loans. Texas Notes does all of our private money lending. So whenever we close a loan, the paperwork is going to be written up as Texas Notes. We have both websites, blinklending.com and texasnotes.com. And I just came up with the 2 different names just to separate it for compliance sake. Also taxation, protections, liabilities, all that stuff.
Before I jump into this slide, and I want people to actually pull out their phones, because the reasons why I wanted you to give a clear separation between Texas Notes and Blink Lending is within this actual PDF, people are going to see Texas Notes, and that might draw a little bit of confusion. So I just wanted to get that out in the open air so people understand the differences between the two. And again, you're going to go into greater detail. One of the things that I've never asked you, Paul, is do you allow, or because you talk about private money lending, do you allow, and we get this question, the reason why I'm asking is we get this question quite often from IRA Club clients, is do you allow or do you lend to IRAs, solo 401ks? Does your company allow for that?
Absolutely. Okay. We love non-recourse loans. We're really, really good at them on a short-term basis. On a long-term basis, I have others that are better at it than we are. They have better terms than we have. So what I'll do is I'll say, hey, let's talk about your scenario. And then if I see your benefit elsewhere, we're just going to send you elsewhere. On short-term loans, it's going to be difficult to find someone, especially in the state of Texas, that's better at it than we are.
So the reasons why many of you that are listening, okay, you guys reach out to us. Hey, I don't have enough money inside of my IRA. We sometimes talk about partnering your personal dollars, retirement dollars, or if you have a family member or a loved one or a best friend that you want to partner your retirement dollars to jump on a deal. That is a strategy that we talked about. But lending, Paul, as you well know, within IRAs, 401ks, any qualified retirement account is quite difficult because 99.9% of banks across the country, to your point, do not like to leverage against them or would want a higher down payment. So this is another option for those individuals that would like to use a portion of the retirement accounts to leverage. Paul, I know you'll probably go into a little bit more detail with one of our clients about UBIT. That's another topic of discussion, or UDFI if you guys decide to go that route. But again, Paul, Blink Lending, this is another source that we would want you to look into, or another avenue if you would like to leverage against an IRA. Without further ado, I'm going to exit out of this, okay? And I'm going to pass it along to you. But for those of you that did not scan that QR code, basically, this is what it is. I will go ahead and I will put it in the chat. So that way, copy and paste. Oh, it just shows 2 files. I don't see. Well, hopefully, Scott, this helps out. Let me do this. Okay. And and let's see if that works out. I also want to put Paul's, I know he put his contact information, but just a little bit more about Paul. Copy and paste. Please feel free to view these at your leisure. And then I'm going to stop talking. And Paul, I'm going to hand it to you. And please educate not just IRA Club members, but myself on this strategy. And let's take it from there.
I love it. So let's see here. I have got a PowerPoint slide right here from the beginning. Am I able to share screen?
Yeah, that's what I'm just about to make you the co-host. There you go. You're in.
Beautiful. Go to the bottom. It says share. I get better and better at this every time.
There you go.
I might have had this one go without a hiccup. Awesome. Well,
there you go.
Thank you very, very, very much. I always have fun getting on webinars with you, and I really appreciate all the kind things you said. There was a quote that you had on there that I've come up with that is, I don't care about the deal. And I want to say that again, I don't care about the property. I care about the person that's signing on the promissory agreement. And the title of this presentation, I always have fun coming up with titles of it, and it's the power of no. And if you see what I did there, it's I bold and I underlined the NO. I am industry famous for saying no, and I love it. I love it. I love saying no. Because us as private money lenders, we've got to pick and choose when we allocate our funds. To go out there, I had an old mentor of mine in the lending business say, and in the real estate investment business also, he goes, hey, you can't get deal horny. And if I offended anybody, forgive me, but he said it jokingly in the sense of, you just can't go out there and just do deals just for the sake of doing deals. So as private money lenders, we have to get comfortable saying no. So a little about me. I'm a husband, a father of 3. I should take my own advice and tell my wife and kids no more often, but hey, that's all a part of spoiling them. I am a 4th-generation real estate investor. I do own properties myself. I've been lending for 20 years. Luckily, my mom told me to do it when I was young. I listened to her, and here we are still doing it. I lend both private money and conventional loans, and I've closed a whole bunch of loans, and I had fun doing it. I am Greek American. That's why we have the Greek flag and the Greek roots. The picture up top there, that is our hotel on Santorini Island. We built it back in 1980. It was the 7th hotel on the island. If you just look at the pictures there of all the other buildings, that's just the village. There are thousands of hotels on the island of Santorini now. And why do I have a coffee cup with a bike on it? Well, I love coffee. I love riding bikes. So why not put that slide? It just made sense. All right, raise your hand. Who believes this to be true? Awesome. Who believes this to be a half-truth? You're absolutely correct. It is a half-truth. For those of you that are on the call like I am that are married, knowing Valentine's Day is February 14th, what does that do for you? See, I can know it's Valentine's Day, but if I don't take the actions behind the knowledge that I know, buy my wife flowers, be sweet to her, take her to dinner, take the actions behind it, knowledge is not power. Knowledge plus action is power. So this is my invitation to you. I promise I'm going to deliver on some awesome nuggets that you didn't know about. And my invitation to you is to apply these within your business. Now, this whole presentation started with me being at a real estate investment networking event, talking to another private money lender about different notes. I'm telling them how awesome this deal is, how high the credit score is, how much money they make, how much money they have in assets. And the whole time they just have this gloss look over their face like they're bored. And they said, Paul, I don't care. All I care about is the deal. I don't care about the client's qualifications. If it's a good deal, I'll lend on it. And similar to how this guy looked, I just put my hands over my face and I go, this person is clueless. I can't make this up. The person has now had 3 foreclosures and no longer lends private money. The market shifted, and when the market shifts and you don't have good clients, you're stuck holding the bag. And by the way, for those of you that are going, well, the worst thing that can happen is for me to take the property back. Yeah, that is the absolute worst thing to happen. You don't want it happening. You don't want to take a foreclosure back. It's just so much, the energy that you spend dealing with that, the opportunity that you're just losing in growing the business and lending more money, it's a lot. So how long have you been saving for is just the context that I want you to put on for this presentation. Like, how many years have you been saving? How many times have you ordered on the left side of the menu, under the appetizer section, when you really wanted to get the steak? Because what you're doing is you're saving for a better future. How many times have you cut the vacation short? Heck, we're doing it right now. We're planning our spring break vacation. My wife just wants to go somewhere on spring break. And Well, it's like, okay, can we stay 3 days? And the whole thing is because the fourth and the fifth day, that's extra hotel fare, right? That's extra meals. So how long have you been saving and how much sacrifices have you made along the way? And we'll tie all this in. What really matters when lending money? Two things: a guarantor, noun, a person, organization, or thing that provides a guarantee, or the collateral, also a noun, something pledged as security for repayment of a loan to be forfeited in the event of a default. We are going to talk about the guarantor today. You can find tons of information out there about how to run comps, how to check a rehab budget, title, this, that. But what I don't think you find a lot of out there is some guy in a really nice suit talking to you about credit scores. Now, why not? This stuff's really exciting. And I say that with the joke, but it is. It should really, really excite you. So we're going to go over 5 things: credit, income, assets, experience, and exit strategy. And since I've got an hour and a half, I'm going to do this quick. I'm kidding.
I like looked at you. I'm like, wait, what? I'm like, that was a joke, everybody.
It was a joke. All right, credit score. Look, our credit score is our numerical representation to our credit score at its core is our numerical representation of our ability to do what we said we're going to do. Right outside is Heights Boulevard here. I've left the door open a little bit because it's a little hot in here. And I heard some background, so that distracted me. Let me say that again. Our credit score is our numerical representation of our ability to do what we said we're going to do. We as lenders want to lend money to people that are going to do what they said they're going to do. I'm going to pay you back. Awesome. I want to work with you. People with good intentions make promises, but people with good character keep them. Credit score, it's a cheat code. It's a cheat code into, does the person that you're about to lend money to, do they do what they say they're going to do? Ladies and gentlemen, if people have a tendency of doing what they said they're going to do in one area, they tend to do it in all areas. See, when you have a good credit score, you have a track history of paying things on time, doing things on time. You also have a track record of making good judgment calls. Those judgment calls will lead over into, are they going to hire the right contractor? Are they going to hire the right painter? Are they choosing the right materials? It all ties in together. And the credit score is the biggest cheat code. Everyone in the office, whenever we have an exception, they're like, I don't know if this deal quite fits, and they want to bring it to me. They all know, start with the credit score. Because I don't want to hear anything else. I want to know, what is their credit score? And then after that, let's talk. Now, I'm not alone in this. Think of the last time you went to a bank and you got a loan. They asked you your credit score. You go get a car. They look at your credit score. So now let's take a step back. If all these institutions that have way more money than you and I do are checking these things, why are we not laying our guidelines on top of it? And that was a question that popped in my mind. I go, wait, I'm going to lend private money, but I'm going to lend it through the lenses of being a traditional lender. I'm going to look at credit score. I'm going to look at income. I'm going to look at assets. And then once I find a good borrower, the person that's going to sign the promissory note, a good guarantor, then I'm going to lend to him kind of really on whatever project he or she wants to do. Because once the person, right, the jockey has proven themselves, they can ride any horse. So I'm all about the jockey in this experience. Now, I had a slide here that goes over 8 questions to ask about credit. I skipped it because we don't want to have this be an hour-and-a-half presentation. But if you are interested in getting the questions on the credit, I'm going to do the same with income, the same with assets, the same with experience, and the same with equity, I'd be more than happy to send you those questions as well. Because by virtual show of hands, how many private lenders have their guidelines written out? You have your guidelines to where you can I can do a few clicks here and I could go to our whole matrix of guidelines of how we lend money. Guidelines are buoys. But a really easy way to find out about credit is you're sitting there with a guy or gal that wants to borrow money from you. And you say, hey, Jeff, if you had to rate your credit from a 1 to a 10, 1 being the worst, 10 being the best, where would you rate it? The follow-up question is the key. Because unless they tell you a 10, any number they give you, you want to say, well, what's keeping you from being a point or 2 higher? So, Jeff, if you had to rate your credit from a 1 to a 10, 1 being the worst, 10 being the best, where would you rate it? Paul, probably about a 7. Okay, Jeff. Hey, Jeff, what's keeping you from being an 8 or a 9? Well, Paul, I went through a divorce a few years ago. Okay, now I can just find out what's going on behind the scenes just by asking a very simple question rated from 1 to 10. Now, if Jeff tells me a 9, I say, hey, Jeff, what's keeping you from being a 10? He goes, well, Paul, not everybody's perfect with their credit. Okay, that's good. But the second question allows you to uncover, and that's why I've got that Sherlock Holmes looking picture there, because you are a detective when it comes to lending. You've got to ask questions and then get behind what the answer really is. All right, Paul, I'm not going to ask questions. I don't want to do it. How can I pull a credit report? Well, We can do it because, again, licensed, bonded, insured mortgage company. CreditCheckTotal.com charges for credit reports. It's a whopping $1. I would make your client pay for that. That's just how I am. CreditCheckTotal.com, you can check credit reports. Also, AnnualCreditReport.com is a website given to us by the government that allows all of us to check our credit without inquiries against our scores. So if you want to know what your score is, go to AnnualCreditReport.com. You can pull your credit, and it doesn't ding against you as an inquiry. A little trick is there's 3 credit bureaus: TransUnion, Equifax, Experian. Every 4 months, go to AnnualCreditReport.com and just pull from TransUnion. Then 4 months later, pull from Equifax. Then 4 months later, pull from Experian. That way, every 4 months, you're monitoring your credit without inquiry. So private lenders, take a picture of this websites for you to check your client's credit scores. If a client doesn't want you to check their credit, or if you ask somebody, hey, what's your credit? 1 to 10, 1 being the worst, 10 being the best, where would you rate it? And they say, I don't know. That's bad. Or they start explaining, then that's just, you just know the credit's not good there. Listen to the story, but I'm a credit score guy. Now, why credit score so much? It determines how much money I'm going to lend. My loan to value is tied to the credit score. See, the higher credit score you have, the more I'm willing to lend you. Well, Paul, why wouldn't you lend to someone with a 500 credit score? I will. I've done it repeatedly. Not 70% loan to value, definitely not 75% loan to value. Maybe we're going to keep you at 55, 60 if we really like the deal, but you're going to have some skin in the game, because your prior mistakes or life, whatever it was that caused you to have the bad credit, I can't have that cost me. So I'll lend you less money. So how do banks and lenders go back over the history of lending, decades and decades and centuries and centuries? The way they offset risk is they reduce their exposure. It makes so much sense. Look, rewind back to 2008. It wasn't the high interest rates that got everybody in trouble. It's like, well, the interest rates went higher and they're on 2-year adjustable interest rates. Blah, 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 blah. Interest rates have been adjustable since the beginning of time, right? You know what hasn't been around since the beginning of time? 100% finance. That's the problem, is you had people that didn't have good credit getting 100% financing. And then what happened is when payments started changing, they looked and they go, well, I really don't have anything to lose here. The house is kind of a mess. I could go get in that apartment across the street. They're going to give me 3 months free rent. And, well, I'll just deal with it later. But go back and look at all those foreclosures and find out how many of them foreclosed when they had a 20% down payment. And right there, you'll go, oh, my gosh, the whole secret to private lending is to lend to people with good credit and have them put money down. That's it. You can turn off the webinar right now. That is the secret to private lending. Good credit, good skin in the game. You marry those two things together and just voila, it's a beautiful thing. So why is credit important to me? Because of loan to value. Every presentation, that thing is going to go out on me at some point. I love it. All right, income. It's Murphy's Law, right? Income, CIA, credit income assets. Just have that engraved. Income, very easy to verify. You can Google request for verification of employment. That form pops up. You say, hey, what's your HR department's contact information? I want to send them this form. You send their HR department this form, and it just fills out all their income, and you have it all right there. Well, Paul, they're self-employed. Well, Paul, I don't want to call their HR department. Well, fill in the blank, whatever it is. Ask for their tax returns. Ask for their tax returns to look at income. Now, I care income for 2 reasons. 1, do I need it to refinance them out? And 2, well, it's actually 1, do they have any IRS liens? See, I'm okay with them taking advantage of all their God-given American tax write-offs and really, really taking advantage of, well, the rules that are there. I love that. What I don't love is if they haven't filed their taxes and now Uncle Sam can put a lien on my property that I lent the money on. So the easiest way to find out about income is get the tax returns, not the tax transcripts. I said tax returns, not tax transcripts. What's the difference? Tax transcripts are like this big, tax returns are this big. You get more details in the tax returns. Why is income important to me? Because it tells me if things don't go right with this deal, how can I refinance them out? So that's a unique advantage I have, again, in being a traditional lender, is I know all the loan programs. I know the conventional loan programs, the FHAs, the VAs, the DSCRs, any new acronym they want to throw at us. Half of our business is traditional lending. The other half of our business is private money lending. So we're constantly chatting with Fannie Mae, with Freddie Mac, and figuring out their rules and what's coming out. And then when that comes out, it's, well, how does that impact our business? So we're always layering them on top of each other. But I'll give you a hint here. The most important question that you as a private lender want answered is, how do I get my money back? Well, if things don't go right, I want to, like, you can't sell the house. Well, okay, now we need to refinance you. Knowing the borrower's income knows I can get them a conventional loan or I can get them a non-conventional loan, what's referred to as Alt-A, alternative documentation, a DSCR loan. So now I can start preparing the client for, okay, well, your loan term's up. We either need to extend or we need to refinance. Here are your options. So again, I care about income because it tells me what the exit strategy options are outside of me just extending my loan. Assets. I get asked, Paul, what's the most important of all this? Assets, without a doubt. I opened a bank account in Greece last summer. When I left, the banker came up to me and he handed me an umbrella. He knew the business I was in, so we formed this little bromance there and chatting up about loans and all that. My wife's going, this is boring. And I'm like, babe, they lend money in Greece like this. Well, when I'm leaving, he gives me an umbrella. And I say, what's this for? He goes, Paul, in banking, we have a saying, when the sun's out, we give you an umbrella. But once it starts raining, I want you to return it to me. And I think that is hilarious because banks are always there when, well, you don't need them. And then often when you need them the most, like when we have a change in the market, they tend to tighten up their guidelines. They tend to tighten up how they're going to lend money. And you see it happening now. You saw it happening last year. So assets to me is the most important because it tells me how big my client's umbrella is. Because the more assets they have, they can start thunderstorming outside, but they've got a big umbrella. See, when someone is remodeling a house and they start tearing out sheetrock and now they have to rewire the electric, well, I don't want them to call me. Because if they call me, that means they don't have money to do it themselves. And if I need to lend them the money, because now I'm in a pickle, right? If I've lent money to somebody that doesn't have the money to rewire the house, I have a choice here. I can not give them money and risk that the project takes longer, and time kills deals. So the longer the project takes, the more things can go wrong. Or two, I have to now lend the client more money. Electrical does not add value to a house. Your house is supposed to have electrical, meaning after the house is repaired, you don't get to go around and say, well, mine has new electrical. Well, it's supposed to have electrical. It's supposed to have plumbing. It's supposed to have a roof that functions. So when these items come in that don't add value to the property, I don't want to over leverage myself. So when it comes to assets, I want to be very clear what assets are. They're stocks and bonds. They're savings accounts, or they're property owners. It's not a credit card. It's not a car. It's not a boat. It's not all these liabilities. It's how much liquid available assets do you have? Well, Paul, my other lender doesn't count our IRA funds. I think that's kind of asinine. I get why they don't. They don't because they can't touch them. So lenders, you know, when they can't touch your IRA funds, our IRA money is protected. But it speaks to the character of the person. When I go to try to lend money to somebody and I'm like, hey, how much do you have in your checking and savings account? They're like 40 grand. I'm like, okay, I don't know. I'm a guy that I want them to have at least 50,000 after closing. So if they have to bring 30 to closing, they need to start with 80. So if they tell me 40, I'm like, okay, well, how can we make this work? And I go, what about your IRA, your 401k? And they go, I have about 400 grand. I'll lend to that person all day long. Like, and why? Well, how mature of a person is that? To where, and how responsible of a person is that to where they've set these saving standards and measures in place to where they've saved that much money. Again, I'm all about the guarantor. I'm all about the person that is signing the promissory note, the document that says, I promise to pay you back. If that signature doesn't mean anything, then what the heck are we doing? So all about assets, because things come up. I myself was remodeling a house, and I had to rewire the electrical and I had to redo the plumbing. And I was laughing at myself telling my wife that. She's like, why? I was like, well, because the very thing that I look out for in lending money, I missed on a project that I was doing myself. So of course you go and you redo it, but I was able to, because I had the assets there. Now, if I'm a borrower that doesn't, I've got to go to my private lender. If I'm the private lender in that case, I'm not liking that phone call because now it's, oh my gosh, if you have to take over, you're the one that has to rewire the electrical. That's the third issue with it. All right, the clicker's still not working. Let's keep it going. How do you verify assets? Guys, very, very easy. Girls, very easy. Bank statements. Bank statements. You verify it with bank statements. Send me your bank statements for the last, I'm a 90-day bank statement guy. So I want to see the history. Oscar, who's a loan officer with us, amazing human being. He's doing a loan right now. It's a $515,000 loan. And he says, Paul, the clients have 210,000 in their bank account. So I love this deal. Let's go. So we're moving the deal forward. I look at the bank statements and I see he's got 70 in there. What's going on? Well, he's about to sell a house and he's going to get 140. Isn't that different than having $210,000 just in your bank at all times, as opposed to getting 140 from the sale of a house on there? There's two arguments to be made. One is, well, Paul, it's $210,000. I get that. The other is, how much of that 140 is spent? Because we get paid on the 1st and 15th, and then we have to pay bills out of that. How many bills does he have to pay out of that $140,000? And then how much is truly going to be left over for our deal? Look, we're going to do the deal because the guy has assets. It makes sense. But we have to ask those questions and get a true financial picture, which is why I want 90 days. Because if I'd have just asked for the last week, I wouldn't have gotten that he had 70,000 in his bank account last month. And now the big transaction hits. So we go through the bank statements also, and we look for large and uncharacteristic deposits that paint a picture of what it is. I started my company with a line of credit loan from my mom and aunt. I went there and I opened a bank account. It had $100 in there. Then I went to my mom and aunt and I said, hey, you have an apartment complex that's free and clear. You could borrow the money at 4.5%. You could give it to me. I'll lend it out at 10, 11, and 12%. I'll give you the difference of the spread. Let me keep the points. And after a while, what I'm going to do is I'm going to start selling notes to other private lenders and recycle the funds and do the exact same thing that banks and other lenders do. Because banks, they rarely lend their own money, right? Like everyone's borrowing money to lend the money. So with the bank statements, it's 60 to 90 days. Why is it so important? If you are a male over the age of 40 and you do not know what this movie is, shame on you. If you're under 40, that's you're excused. But you have to go watch the movie, which is Gladiator. Ladies, if you ever want to just check out one night and just have your spouse or significant other really, really happy, let him watch Gladiator. It's just an awesome movie. Now, there's a famous scene in the movie, and it's up or down, right? Well, I'm here to tell you, in old history, this meant send them to the heavens. So when you're in the arena and you're fighting, this is send them to heavens. This is keep them on earth. So the movie got it wrong. Most do. But why do I care so much about assets? Am I doing the deal or am I not doing the deal? Am I doing the deal or am I not doing the deal? Because if you don't have assets, earlier when I mentioned when they come to me for the exception, they start with credit score, it's because they already have money in the bank. Because if they don't have money in the bank, forget about it. I do not want to lend money to somebody who may not pay me back or doesn't have a shot at paying me back. I have lent myself over 600 loans in the last 6 years. I have 6 foreclosures. That's less than a 1% foreclosure rate. My counterparts go, Paul, you're nuts. You're missing out on so much opportunity. Do you know how well I sleep at night? Well, I've got this arm tingle thing going right now, so not so well during some nights. But I never, ever lose sleep over, is this person not paying? Is that person not paying? Because I have lent to somebody that has great credit, great assets. Over 80% of our clients have a 700 plus 40 credit score. Over 80+% of our clients have $100,000 liquid assets. Our secret sauce is who we lend money to. Now, next is experience. I love this slide. Knowledge, dots, experience. We're connecting the dots. I mean, just a very clear visual of what knowledge is and what experience is. I will lend to people with experience. Well, Paul, what if they haven't done a fix and flip? I don't mean fix and flip experience. I would much rather lend to a 55-year-old who's bought in 4 houses, who's had 6 jobs, who's raised 2-3 children, and that has a 680 credit score, that's never fixed and flipped a house before, versus a 23-year-old who is now working on their second flip and is about to do a 3rd flip with me. So I choose life experience, and of course the real estate experience matters. In that scenario I just described, I'd probably lend to both of them if the numbers are good and they check out. But this slide, I go over it purposely because if you're someone that's hung up on working with someone that has experience and has done it before, thank you, because we have gotten so many clients because there's lenders like you that won't take on the chance of lending to someone that hasn't done it before. If they have good credit, if they have good assets, they have shown you a certain way of behaving in life that isn't going to stop right now all of a sudden based on a fix and flip deal. There's possibility lending and there's probability lending. We do lending based on the probability. Paul, how can I check and see if they have experience? This one's easy. Ask for the HUD. I love the guy or gal that shows up with the big book and goes, look at my fix and flips. Look at my, and then you're sitting at a networking event, you're going through, you're going, wow, that's a really nice color you chose there. You don't even know if that's their fix and flip. They could be showing you their cousin's book. They could have gone and gotten pictures from Pinterest, right? You don't know. You know how you know they did a deal? You say, show me the HUD. The HUD is the closing disclosure for when, listen up here, it's for when you bought the property and you sold the property. Because I want to know it was you that bought it, and I want to know it was you that sold it. Because so many times, and I've done this, I've said, hey, I'm fourth generation real estate investor. Someone is showing you the work of somebody else, and you're making a decision based on somebody else's work, not the person that you're lending money to. So one of the easiest ways to verify this is with the HUDs, is show me a copy of the HUD when you bought the property, show me a copy of the HUD when you sold the property. Contractors, I don't force my clients to work with certain contractors, but I do always ask, hey, just curious, is your contractor licensed, bonded, and insured? Huh? They're not licensed, bonded, or insured? Are you sure you're okay with that? I want to create some doubt in their mind, because I want to create problems they didn't know they had and then offer them solutions for them. Also, hey, what's your client's rating on the Better Business Bureau? Or how many Google reviews do they have? See, I want to work with someone I spent a lot of money on our sound system and TV system here. And the guy has over 250 reviews. He doesn't have a bad one. He's getting very, very close to getting a bad review with there. And I know what's going to happen the minute I write it. All these problems are going to get fixed that we're having around here. Because I want to work with people who value their reputation. Because when something goes wrong, now I've got a throat to choke, right? I can say, hey, as opposed to the person that doesn't care, my concrete guy out there that has to redo a patch. And he doesn't care if I write a bad review for him because he doesn't have reviews. Now, luckily for me, I hired the same concrete guy that's going to pour the other jobs we have coming up. So if he doesn't fix this, well, he's not getting any of the 12 duplexes we're about to build. So I'm going off on a tangent. All right, number one question private money lenders should ask is what? Number one question. I hinted to this earlier. Exit strategy. How do I get my money back? Look, I love this by Mark Twain. It's not return on my money I'm interested in. It's the return of my money. First, let's talk. How am I going to get my money back? Then let's talk about how much money I'm going to make. And often I see private lenders and investors, they're caught up in so much. How much money do I make? How much money do I make? That 150-page document that you have to sign that says, we're not responsible for everything. You skip over that because you're so deal horny to bring that back that you're just blinded by the returns and not, do I get my money back? If you want help, if you want support, advice, guidance, texasnotes.com is a website we have. And it's in the process of being redone right now. And we're really, really excited about that. We've redone Blink Lending and Investments, I think 7 times over the last 6 years. And we're now just doing Texas Notes for the 2nd time over the last 7 years. Some private lending opportunities. Look, we sell notes is what we do. So I'll originate a loan. And then what I'll do is I'll turn around and sell the notes. So if you're someone on the webinar watching and you have IRA money or you have funds that you want to allocate out there, this is how we present our private lending opportunities. This is a deal that we've already funded. So if you want to get added to our email list, I'll show you where you can do that. And when we when we lend money, that money comes out of our bank account. And when that money comes out of our bank account goes down. And then we do another loan, it goes down again. And then we do another loan, it goes down again. Well, unless we get our money back, we can't do other loans. That's just how lenders work. So what we'll do is we'll originate the loan, we'll fund it, and then we'll turn around and sell the note. So when we sell the note, we present it as a private lending opportunity. And always give you the address and then exit strategy. What is the client's intention? This client is to buy and keep this property as a rental. And then we'll give you the loan terms to the borrower. So total loan amount to our borrower is $480,000. We have a $150,000 rehab budget. The ARV is $660. It's a 73% loan to value. So we don't like to go above 70%, but I wanted to show you one that we went a little higher than we normally do and that we lent a little more money than we normally do, just to show you the one-offs and not just the pretty ones. What's really important is I want you to pay attention to how much money the client brought as money, skin in the game. They brought over $100,000 of their own money to closing. On a scale of 1 to 10, how likely do you think this client is to walk away from this deal, to let it foreclose, knowing that they're going to lose $100,000? See, it's something to walk away from upside, but you're not going to walk away from your own money. See, if they don't put any money in this deal, and now it's, well, we're going to lose $150,000 if we don't do this deal, because that's the profit they would have made, as opposed to, if we don't do this, we're going to lose $250,000. The 150 we could have made in profit, plus the $100,000 of our own money in the deal. Rewind to 2008. It was bad loans and not having down payment money. So you want skin in the game, and you're going to notice that with our private lending opportunities, we have a lot of skin in the game on our deals. And we do that so clients don't walk away from the deal, because when they pull back that sheetrock and they see that electrical's damaged, or they see they have to redo the plumbing, I want them to kick, scratch, and claw to pay me back. I don't want them just to give me the keys because they didn't have anything in it. Now, client, $100,000, it's a 12-month loan term. We lend them at 10.99. The next things you're going to see are loan terms to you, the private lender. So we tier how we pay back, how we pay our rates. In this example, if you're buying 50 to 100,000, we're paying 7%. 100 to 150, we're doing 7.5%, and then 150 plus, we're doing 8%. We've since introduced that if you buy the whole note, and let's say it's over 400,000, you buy the whole note, we'll pay you 9%. So not only would you have more protections because you own the whole note, but you also get paid more. Then after that, we go into some really cool things that we do as to, well, if we're charging 10.99 and we're paying you 8, what are we doing for that 3% spread? This is cool. We're going to pay for all the recording and the document prep fees. So all of IRA Club's fees, we pay for those. The documents, Kelsey will do them for you. Christy will do them for you, and then send them over, and you just do read and approved. So make that process very, very easy. The transfer and assignment of lien document that shows the world, if you need to, that you're the note holder. See, what's different with us is you're in a first lien position. First lien position, you own the note. So if something goes wrong, you own the asset. So when we're selling you the note, we're putting you in a first lien position. You're not in the pool. It's not some hedge fund. You're not in, I'll say it, pools are for fools. So you're in a first lien position. You have the note. Second is we're going to pay for all the servicing fees. So every month we're going to deposit the money into IRA Club's account. No wire fees are being paid for by you. No bank fees are being paid for by you. We're handling all that. You're just checking in your account. By the 15th of every month, you've received a distribution. Now, I say by the 15th, it's been a long, long time since we've paid past the 10th. So every month before the 10th, the money hits your account. So we're going to manage the deal. On top of that, we're going to make sure the client's doing all the things they're supposed to do. We're going to make sure the payments are being done on time. Right now, it's the 30th of January. So after tomorrow, all property taxes better be paid. We're going to make sure they're kept up to date on insurance. So we're going to do all the things that you should be doing, but we're just going to handle that. That's great. But the coolest thing about all this is we're guaranteeing the notes. See that bottom line? We, Texas Notes, also provide our company guarantee, meaning should the loan default, we are responsible for repaying you, not only the borrower. So now do you know why I only have 6 foreclosures in 6 years? Because I am signing. I'm sitting on my desk right here. Here's our transfer and assignment of lien document. I hope no one screen slows that down. Well, it's actually recorded public record, so it doesn't matter. So this is what it looks like. It's signed here on the back by myself, notarized, and that gets recorded. And if the borrower doesn't make payments, you are never getting a phone call that says, hey, Jimmy, hey, Jeff, hey, Jane, you know that loan you did on 123 Sesame Street? Well, the borrower hasn't paid us. Check's in the mail. As soon as it gets here, we'll make payments to you. In the meantime, just hang tight. I really, really believe in it. Never have we made that phone call. Instead, it looks something like this. Hey, Jeff, Paul with Blink Lending and Investments. Do you have a quick minute? I do. Awesome. So that deal that we have on 123 Sesame Street, we're going to be moving forward, engaging our foreclosure attorney. Now, Jeff, there's nothing for you to do in this situation. I'm just calling you to keep you aware as to what's going on. Well, Paul, I got payment last month. What do you mean you're going into foreclosure? I know, Jeff, we made that payment. The borrower didn't pay us, but we paid you. We're also going to pay the attorney. We're also going to pay all the costs with that, and we're going to continue to pay your note all the way until it gets paid off. Now, nothing for you to do. I'm going to send you some emails. I'm going to include you with our attorney just in case something happens to me, knock on wood, and tomorrow, blah, 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 blah. You need to take over. This is what you do. Jeff goes, okay, Paul, thank you very much. A month goes by. Hey, Jeff, we're going to auction. Or, hey, Jeff, they paid us off. The point is you have all of this in writing, guarantees in place. So you are just sitting back collecting interest payments, never having to visit the property, never having to do a draw request, never having to check on your funds, never having to engage an attorney, just doing what you're supposed to be doing, which is eating on the right side of the menu and staying those extra few days because of all the stuff that we've done. Then I'm going to tell you about the client, the borrower, active real estate investor, and a repeat client of ours. They're closing in the name of an entity, signing a personal guarantee. Wake up to that one. I don't care if you close in an LLC, in a trust, whatever. I am going to get your personal guarantee unless we're doing a non-recourse loan. Then, by definition, there is no guarantee because that's what we agreed to start off with. I'm going to give you their credit score, 690. I'm going to give you their income. I'm going to give you their liquid assets that's available and what accounts it's in. And then I'm going to tell you about the property, the address, the purchase price, the rehab budget, the after repair value, and then give you comps based on that. So that's one deal. Here's another one. This in Spring, Texas. I picked one where the client didn't bring any money to closing. Now, why? He did 20 loans with us last year. 20 loans. Whenever I do one loan with somebody and then I do another one, I tie both those loans together. So if they don't pay me here, I take back both. So if someone's done 10 loans and you don't pay me on one, all 10 can be foreclosed on. So it's called cross collateralization. So with this client, I cross collateralize all of his properties. So if anything goes wrong, I can take over his entire real estate portfolio. All the deals are less than 70% loan to value that he does. 6-month loan, and we give him nice terms. And then we go right back to you with here are the loan terms to you. Again, the biggest thing to pay attention to is that, the guarantee that we give behind. Active realtor, seasoned investor, repeat client, cross-collateralizing all the loans, closing an entity, personal guarantee, 740 credit score, 300 plus in annual income, 250 in checking and savings accounts alone. There's the property again. So that's how we present our deals. If you're interested in joining our list, our private lending network, it's hello@Texas Notes. You can also email me, Paul@Blink Lending. It's also hello@Texas Notes. What we do is when a deal comes out, we send it out on email. If you like it, you reply, hey, Paul, I like the deal. If someone else took it from you, I say, hey, the deal's gone, but guess what? We have another one coming up. And then I send that to you offline without sending it out to others. Guidelines. What are your lending guidelines? What are your lending guidelines? All of us as investors.
Paul, I'm so sorry. I didn't mean to cut you off. Before you jump on the guidelines, inside the Q&A, Brenda asks you a specific question. If you don't mind, just click onto that. You want to read it out loud? She wants to confirm your numbers.
So the first slideshow showed a purchase price of $480, which was not 73% LTV. The next slide shows a purchase price of $418,500. The correct number then, that would pencil more at 73. Brenda Coleman, I like how you roll. Come on, go back. All right, so that's it. So Brenda, that's actually total loan amount is 480. You're not alone in that. People do that often. I've thought about putting up the purchase price there, but that's the total loan amount that we lent. The 418,500 is what they bought it for. So they needed 418,500 to buy it plus 150 to rehab it. So they needed 568,000 here. What we did is we lent them 480. Which they brought 88,500 to closing, plus they had about 20,000 in cost by the time they paid our cost, title cost. So when you add the money they brought plus the cost, that's how we come to our plus 100,000. So the 418 is what the purchase price was. The 480 was our total loan amount. But great eye there.
She actually said thank you for the clarification.
Very, very welcome. That's again, hello@Texas Notes or Paul@Blink Lending. And then guidelines. What are your lending guidelines? First slide showed Santorini, Greece, where I grew up first 10 years of my life. Right down the hill was a beach. That's where we went every day after school and played as kids and spent our summers. And we swam in a beach called Kamara. And it's all the way towards the end. And what it means is arch. And it was around a mountain. And on the other side of the mountain is another village. So to get to the other village, you have a choice. You can drive way across, which takes about 25 minutes. You can go up and down the mountain, which, you know, if you have a donkey, do it. Or you could take a boat and go around the mountain. Well, that where we swam is where all the boats would come in all the time. And they have these buoys that are out there that would always guide the boats and say, this is where you come in. The boats always came in through the buoys. They never went outside of the buoys. As a lender, never lend outside of your guidelines. Your guidelines are your buoys. Do you, as a private lender, have your buoys set in place? If you don't, let's hop on a phone call. I promise we'll get them knocked out. It's much easier than you think. All right, so for the person that's been rolling their eyes during this presentation going, gosh, credit scores, income assets, he has all these rules, like I will never lend money based on that. Okay, don't. But I ask you this question. If you know the answers to those questions and those answers aren't that favorable, and then while you're getting those answers, you're going, Paul would never lend to this client. Don't you think that's your cue to charge them more money? Like if you know they have a bad credit score, if you know they don't have assets, if you know they don't have income, and you're still going to lend them money, don't you think that a higher risk client deserves higher terms? And then on the other side, well, Paul, this is my favorite question I get asked. Paul, how do you get all these clients with all those rules? Well, in order to get the client that you want, you have to be the company that your client wants. So I'm not nickel and diming them with a bunch of junk fees. I'm not charging them interest on their undrawn rehab budget. I'm not charging them prepayment penalties. I'm not charging them wire fees. I'm not charging them all those fees that irritate and annoy the dickens out of qualified clients. See, I don't want to get nickel and dimed. And I think there's people like me out there too that don't want to get nickel and dimed. So we don't do junk lending. We don't do the junk fees. We very clearly, here are your terms. This is how we operate. And it's worked very, very well for us. So to that person out there that's like, I still don't care, look, pay yourself more if nothing else. All right, quick market update. Look, interest rates, we're getting a lot of talk about this stuff. I'm at a Tom Ferry conference right now. Well, I'm at my office right now. I'm about to go back to the conference. And it's probably a room of like 600 realtors in there. Mortgage guy, gonna go market, right? Plus Tom Ferry, he comes out with some pretty cool stuff. He started out by saying, guys, with absolute certainty, interest rates are gonna be at 5% in the summer. And I busted out laughing in front of all 600 of those realtors. I couldn't help myself because how the hell does that guy know? Like, how does he know? So for anybody out there, it's like interest rates are going down. It's certain it's going down. The only thing that you know with certainty is where interest rates are today. And where interest rates are today for home buyers is they can get in the high fives by paying a little bit of money. They can get in the mid sixes by not paying money, or they can get in the high sixes by getting money paid to them. See, because the way interest rates work are like this. It's a seesaw. Rates on one side, fees on the other. You want low rates, your costs go up. You want low cost, your rate goes up. So if you've ever bragged about, I got to refinance and I didn't have to pay any fees, well, you've got a higher interest rate. So you're actually paying fees over the 30 years or however long you have your loan. There is no bank, no lender out there that is doing anything for you for free. Your mom and dad told you there's no such thing as a free lunch. They weren't lying to you. So whenever you're getting no cost, know that you're paying for it in the rate. But rates today, if you're buying a home to live in, high fives, mid sixes. If you forget everything and remember nothing, the golden rule, I went home one day and I told my grandfather, I said, you know, when I moved to America when I was 10 and a half years old, I didn't read or speak English. And we stayed with my grandfather, my mom's dad, for a little while. And that was just some awesome, awesome times. I'd come home every day and I'd get some grandfather wisdom. And I came in and I said, howdy. I used to call him howdy. I said, howdy, you know what the golden rule is? And he kind of chuckles and he goes, yeah, tell me. I said, do unto others as you want others to do unto you. He goes, well, two things about that. He goes, he asked me, he goes, in the morning, do you like juice or do you like coffee? And I thought that was weird. I was like 11 years old at the time. I said juice. He goes, okay, well, I like coffee. If you're going to treat me how you want to be treated, you're going to give me something I don't want. So don't treat me how you want to be treated. Treat me how I want to be treated. Boom, goal. Do unto others, not as you want them to do unto you, but as they want done unto them. And he goes, but that's all baloney. You want to know what the real golden rule is, kid? And I said, sure. He goes, he or she that has the gold makes the rules. And boy, do I love that one. So as a private lender, never, ever, ever, ever forget you're in control. It is your money. You're the one that worked hard for it. It's your attorney that does the closing documents. It's your rules that set the tone, not the borrower. He or she does not get to set the rules. Now, you also have to know that they have choices. So it's a balance act. But I share this with you because you get to make every decision. It's not a negotiation. It's here are the terms. Would you like to borrow these funds? And of course you do it with compassion. Of course you do it with empathy. But I continue to hammer on this because repeatedly I have gotten phone calls from other private lenders that go, Paul, do you have a foreclosure attorney? Of course. What's going on? well, I did this loan and the borrower's not paying. I said, okay, can you send me the docs? He goes, yeah, I gotta get them from your email. No, from them. Well, what do you mean? Well, can't you just call your attorney and get them? No, I use their attorney. You did what?
Oh,
You
wow.
lent somebody hundreds of thousands of dollars and you let their attorney draw documents that, let's face it, you have no idea what they say. So please do not ever, 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 ever let your borrower draw documents. Any questions? We've had them in the chat. For the sake of time, who's awesome? You are awesome. If you like to give me a call directly, Efcharisto, that is how you say thank you in Greek, Efcharisto, or you can just go F Harry Stowe, and that's how you say it very easily. F Harry Stowe. Done. That's my cell phone number. That's my email address. Ravi Kaku, dear friend of mine, partner. He has tons and tons and tons of conversation with private lenders. If you join our private lender list, you'll get emails from Ravi. You'll get emails from me. You'll get emails from Oscar, from Rick, all of us loan officers and all of us that produce loans. We put that private lending opportunity together. We send it out. And then if you have questions, all you need to do is fire away with them and we go from there.
A couple of questions popped up. A couple also popped up in the chat. But to those of you, and I know for the sake of time, I just want to run over to Investors Row just to have you make sure that what does the process look like within your IRA? Remember, you could use your personal dollars and your retirement dollars, whatever investment opportunity that's out there. But my job is to talk to you about diversification, whether you're using both sides of the spectrum pole, right? We talk about diversifying not only your retirement dollars, your personal dollars, and your personal dollars included with your retirement dollars. So Paul, I want to ask you a question. This is coming from me. Can you partner, let's say a husband, wife, or a spouse has $25,000 inside an IRA and the spouse has, let's say, $25,000 in their IRA. Can we partner together to jump on a promissory note?
You most certainly can, and we have lots of clients do that. And it doesn't have to be husband spouse. We've got father-son teams, mother-daughter teams. We've got friend teams, college buddies teams, and then without getting in too much trouble, you can partner personal funds too. There's just certain ways that you have to do it to be above board all the way.
Somebody actually mentions in the private chat. So what are your minimum investments? 50,000, if I read that correctly?
So that's what we advertise. We like being the company that every now and then we get a phone call and someone saved up $26,000. I don't want to be the company that tells somebody no. So if you have funds and they're under that 50,000 minimum, don't look at us as, call us, send us an email and say, hey, this is how much I have. And will you invest? And 9 times out of 10, we end up finding a place for it. So 50 is what we advertise, but we've taken smaller amounts.
Great. Accredited, non-accredited, doesn't matter, right? Just to confirm.
Doesn't matter. Nope. And then Katie asked the question, do we pay is max 8%? No, we pay up to 9%, depending on notes and depending on how much funds you have with us.
Nice. So yeah, I get, Paul, just so you know, I get a lot of sarcasm and some of the companies that I bring on board, I get scrutinized for saying, oh, you only bring in accredited investment options. Well, that isn't the case. So both, for anybody that's listening, accredited or non-accredited, can jump on this type of investment opportunity. Another question that did pop up, and I wrote it down and I erased it. I've been burned in the past before. Forgive me. How risky is it to invest? And I know that you cover this. She jumped on a little bit later. And one other question came up was, how many foreclosures did you have? And I think you said 6 out of 600, was it? If I remember hearing you say
600 plus deals, correct. We've had 6 go to foreclosure.
Wow, that's actually that's an unbelievable number. Now let me, if you don't mind, and feel free, everybody, keep putting in your questions that won't have any. I want to show you the process of, I'm going to share my screen. Here we go. So if you are an IRA Club client, okay, if you want just more information, if you want to learn about Blink Lending, Texas Notes, remember, they are one and the same company. You can find them. They're right over here, Texas Notes. Click on Learn More. It's going to give you a company overview, their investment strategy, which is everything that he covered already. Details about the actual company, how long they've been around. Now, Ravi, I met a million times over. A lot of our IRA Club clients actually personally work with him. He is IRA Club's main point of contact for IRA Club members. So please feel free to schedule a call with him. You wanted to say, Ravi, is he walking down the aisle?
That's Ravi right there. Say hi to everybody.
How are you, Ravi?
Hi, everybody.
I want everybody to put the face to the name. So if you want to schedule a call with Ravi, feel free to do so. Remember, we can't talk about investment opportunities or the companies themselves. That is the reasons why we created Investors Row, is to help you find investment options. If you want to actually click and put your investment directions form, remember, this is a little bit different. This isn't a private equity deal or a private fund where it's fully integrated into our banking software. Every single fund is different. I'm sorry, every single note is different from the next, which means you have to reach out to Ravi and see what is best suited for you. What are your options? So when you're going through this, these are the investment details. He's showing you what the minimums are. It says 50, but he just clearly told you, Paul, if you had 25, 30, 40, whatever the case may be, reach out to Ravi. He'll break those numbers down for you. Here are some PDFs, some pitch decks. The actual docs themselves, Paul's not hiding anything from you. He's telling you, go ahead, download, find out what's best suited for you if you choose to do so. And then if you want to make the actual investment, which is really the investment directions form, you're going to put in your first name, last name, your IRA account number, telephone number, your email. Once you submit this form, Ravi and our team at the IRA Club will simultaneously get the investment directions form from you. Ravi will personally reach out to you, and then you guys will discuss what are you most interested in. Ravi will provide that to our investments team. We'll cross the T's, dot the I's for you. The funds go out from your IRA. And then, as Paul mentioned, sorry, not the dividends, but the dividends will come every single month back to your IRA Club account, tax-free or tax deferred. So when he talks about 7, 8, 9% returns, when you're utilizing retirement dollars, that's more like 9, 10, 11% returns, if that makes sense, because you're eliminating Uncle Sam. Okay. Paul, I have somebody in the chat. Ramis, can I invest with a solo 401k? Thomas, absolutely you can. Again, reach out to Ravi. Very easy to do. As I mentioned, go to Texas Notes. That's where I don't want the confusion to kick in for you IRA Club clients. Okay. I'm just stepping back 1 second and schedule a call with Ravi. Okay. Go to Investors Row, Texas Notes, schedule a call, and he'll break it down for you.
They were supposed to. They did.
Just Ravi's trying to just retire me a little early over here. Like I want my bearded picture on there right there.
Well, listen, I actually, you know what's funny?
Together next time.
No, listen, Paul actually said, do you want Paul's name on there? And he's like, no, he'll kill me. He's like, do not put his name and number up there. So I said, as you wish.
That's funny.
But to the rest of you, I wanted to be respectful of people's time. It's 2:08. We went a little bit over. I thought this was unbelievably educational. Paul, thank you for your time as always. I already know a couple of people have hit me in the private chat thanking me. You will probably be receiving a couple scheduled calls, Ravi. I'm going to leave it to you with, as I typically do, your final thoughts as my guest. And is there anything that you want to focus on or hone down? And just want to say to everybody, thank you for joining us. This is our second webinar of 2024 with many more to come. And we are so grateful to all our IRA Club clients. Final thoughts, Paul, go to you.
Yeah, so there's one question. There's no cost to join the list. I forgot to answer that one. And the parting thing I'll leave you with is 2 parts. Any questions that you have, even if you're lending out your money and you're not buying a note with us, and you just have a question about a deal, call us. We'd be more than happy to answer the question. Second part is, in God you trust, and everybody else you verify. So we verify the bank statements, we verify the income, we verify the credit. It's you're making important decisions that have to do with the finances that not only impact you today, but also could be impacting your future generation. So it's something to be taken very, very seriously. I've seen a lot of people lose money doing it the wrong way. And I don't want to see that happen to anyone on the webinar or anyone period for that. So thank you very, very much for having me on the webinar.
you, Paul.
I'll stand back here so we look even. So it kind of looks like I'm taller than he is. But thank you guys very much. You've been awesome.
Thank you.
Whole bunch of thank yous. Thank you guys for joining us. And remember, Paul covers all fees. That does include IRA club fees. That's one of his biggest pet peeves are fees, just like me. I don't believe in percentage-based models. I've always believed in flat fee models. He follows suit. And again, one of the reasons why we do like Paul Texas Notes Blink Lending is their doors are open for you. They don't just like me. You guys are more than welcome to talk to me. Our entire team schedule calls with anybody. Remember, when it comes to the actual investment process, our job is to open up doors and opportunities. That's it. That's all I could do for you. Paul, I look forward to seeing you in a couple quarters from now, 6 to 7 months from now. You're one of my favorite presenters. You do the exact same thing I do, hand gestures. I think that's just got to be a Mediterranean thing, or it's very funny. It's very funny. But Ravi, it's always a pleasure, buddy. Look forward to hearing from you too. Take care, Paul. Take care, everybody. Till next time.
Yes, sir. Cheers. Thanks, guys.